Okay,
Here we are.
we're live. Heart Investment Group live stream October 8th, 2021.
Mm-hmm.
You may notice something about the background. It looks like we're on green screens, but we're not. That is indeed the Peace Tower behind Ben Hart here at our HQ at 50 O'Connor. And these are fake plants behind me. So,
They're looking good
we're in the
though.
office. Yeah, they do look well taken care of.
That's
Except
it.
for the dust on them. Okay, well, beautiful Thanksgiving weekend. Start to the Thanksgiving weekend.
That's right. Yes.
Yeah. Will people be pleased with how the markets ended up leading into this weekend?
I don't think they'll be super pleased. I mean, it was just another week of chop, for lack of a better term. I mean, I think we had a couple of days there. So I guess on Wednesday we had markets kind of opened down pretty hard. Kind of midday rallied up and had a pretty solid close into Wednesday. Looked like a relief rally yesterday when they came to sort out the debt ceiling, or at least they kicked the can down the road until December. And I know someone had a question on that, so we'll talk about it in more detail. Then today we had the jobs number. I think that maybe disappointed a few. Markets kind of meandered around nowhere and then closed the day. US markets closed the day slightly negative, and Canada closed the day up 0.1 tick, so flat on the day as well.
That's uninspiring.
It is.
It's not your fault, but the market has uninspired me for today.
It is. Well, the crypto market had a great week, but broad markets did not.
Yeah, that's unfortunate. Okay, well, it wasn't a great week in the markets, but was it a great week for the Hart Investment Group and its portfolios?
Sure. No, look, I mean, crypto has been something that we've talked about and owned on and off. So, even some of the companies around it that we own, like the MicroStrategy, was back through $700 for the first time in many months. Like Block, BLOK, the ETF that we own, that would own like Square and PayPal and those kind of names. So those ones had a good week. So that was good. Bitcoin and Ethereum also had a good week, up about 20% this week, both those two names. So those certainly nice to see those catching a positive momentum. There's so much negative press around what was happening in China, what was happening there. And then we had Gary Gensler, who has been combative to crypto, come out and say, we're supportive of it. We're not going to ban it. We think it's appropriate within the system. And so you saw some kind of positive news flow come through. But more than anything, it's been the first time in probably a couple of years where we've seen that inverse correlation that it's historically had, where there was a couple of days, even Wednesday, where markets were down pretty hard and most of the cryptocurrencies were up through that time frame. So starting to see some real divergences in asset classes, and that really is a positive thing to see.
Right.
Okay. Yeah.
Good. Okay. And then what did you get up to in the portfolios this week?
Yeah, so on the back of the last couple of weeks, I've been talking about adding to the S&P, adding to tech, adding to kind of that potential look like we're going to go back potentially into that quad 2 where growth reaccelerates. Those names we've already owned, so the S&P 500 stayed with that. The only real switch would have done last week of material consequence would have been moving out of corporate bonds, LQD, back into financials, and so U.S. financials, that is. So XLF, which does well when the yield curve steepens, which we've seen, where the long end is going up, obviously short end staying kind of depressed. That's historically good for the US banks because they borrow on the short end and lend on the long. So there's a spread pickup when yields move up. So, as I've said the last couple of weeks, though, I do think this is a short-term phenomenon where we have kind of growth starting to reaccelerate off the back of the jobs number today was crappy because that was an August jobs number when Delta was at kind of peak, where the virus is peaking, jobs were being lost. So backwards looking numbers look bad. Forwards looking for the next quarter, you probably get some pickup in jobs, we get a pickup in consumption, and some of those names that have been challenged the last 3 or 4 months should do quite well. But I do think this is kind of the final move in this current expansion. So a lot of these things like financials is likely a 4 to 8 week hold in my view. But that's what I did from a positioning perspective.
Gotcha. Remind us what quad we're in right now.
Well, it looks like we're transitioning from quad 3 to quad 2. And so I'm going to put up in my charts, I'm going to put up kind of the forecasts and the probabilities and those kinds of things. And where on the kind of the pure quad map, it still says quad 4, and we could tilt into that. But presently, Keith and his team are tilting towards saying we're in that kind of quad 2 period. Darius as well, which we talk about each week, is kind of gone from a much more defensive, which 3 weeks ago he would have had a 40% cash allocation. That number's down to about 10% now. And I think he's in a bit of a uncertain time where he's almost 20% in each quad, where Darius would be, and kind of that's a strange position to be. So yeah, Keith thinks we're transitioning from 3 to 2.
Okay. And what types of things typically do well on quad 2?
So that would be the consumer discretionary commodities, small caps like high beta, SPACs, those kind of names do well through that period.
Gotcha.
Yeah.
Okay.
Yeah.
Awesome. Do you want to do we want to get to everybody's favorite segment, Ben's charts?
Yeah, sure.
Sounds like a good segue there. You might have some additional info on the quads.
Yeah, there's a couple of things. Maybe I'll hit that slide first and then hit some of the other things second.
Sure.
And just reorganize the slides here a little bit.
Sure.
All right, let's just escape this here. Just working on the one screen with this one today, and being in the office here, just learning the new process. Here's my share screen. Okay.
While you do that, just a reminder if anybody has any questions, just there's a Q&A button on the bottom, or raise your hand if you want to pipe up.
Yeah, so I thought I'd put this one up. This is kind of the general schematic. I don't know if I've used this or put it up. I certainly think I have in previous presentations, but I'm not sure if we've done so on the roundup. And obviously there's a lot of data and smattering of information across here. I think what is a high level look at this is it gives you a sense of where they expect things to happen, where they expect things to move over the next multiple quarters. So this is the high level, and as we drill down, which I will show on the next slide, it shows kind of Canada, if you look at it, forecasting Q4 and then 1 and 2 of next year. Looks like we're going into quad 4. Looks like Canada is probably going to be heading towards that soonish as well. And if we look down at the US, it still says 4, but I'll show you in the next slide where the probabilities are changing based on the data that's changing. So this is a good kind of high level way to look at it. And if we've we've talked about about China. If you follow my dailies, certainly this morning, I talk about we're going into that period where China looks like it may be starting to re-accelerate. It shows that we're in kind of quad 3 there still, with quad 1 coming. So as we saw their PMI numbers tick up above 50 for the first time in a couple of quarters, maybe China's in that kind of bottoming phase, maybe for another quarter or so, before you start to see it start to turn up. Because I know the last couple of weeks you've asked me, is at any point would you look at considering to buy China again? And so as you look at this from a high level, it makes sense to start considering it.
Right. I'm not sure that I have seen the chart before.
Okay, a little busy. They all are a bit busy, but I think that the part of why I wanted to put up this is what I get into the data. A lot of people ask me, how do you look and follow all of these things? One of the great things that that Hedgeye does is they put this out. This is actually a spreadsheet. I just grabbed the screenshot from it. But if I drop down this box here and I want to look at the different countries, I can look at all the countries that they cover in the world and see what they see from both growth and inflation probabilities. And so if we look at the US, for example, here, if we look at these numbers, we see in kind of their probabilities are starting to change where, initially we looked at these a while, probably a month or so ago, where we've seen kind of that probability case from a quad 4 in Q4 was roughly around 85%. And now that number, as we get into Q4, those probabilities of quad 4 is dropping dramatically. And so I guess I would look at the kind of the standout, and I've referenced we're kind of getting in that middle where growth and inflation, everything is kind of huddling around the middle. But the one thing I would look at is if you look at the US or you look at Q2 of next year, where I say we expect GDP and inflation to slow right alongside when they start to taper aggressively. And so that puts your probability of a quad 4 in Q2 of next year, which is growth slowing and inflation slowing, at 95%, which is about as good as I've ever seen it from the outcome that those numbers together probably result in that growth and inflation slowing together. And you don't want to own anything that you own in quad 2. So this is important to pay attention to, and something that I thought we could have a quick look at for people.
Yeah, that's super interesting. Okay. Do you have one more or just the two today?
I got two more. Two more. This one, did want to cover two more. This is very interesting if you're following the crypto space, because there's lots of people say this is a foreign issue. This isn't something that any of the major countries are going to do, or at least any of the developed nations are going to do. So for anyone that follows kind of international finance, Singapore has really been a leader in international finance for decades, and they've really been forward looking on how they've been developing this. And so MAS is just the Central Bank of Singapore. But the reason it's interesting is it's a hub. And so they've forever been a hub for many different countries. And what they've done is they went out and they went to survey anybody that's willing to help them look at central bank digital currencies. And there was they put out an RFP. They had 300 proposals come in. 50 different countries participated in it, and then they picked these finalists to help them create central bank digital currency on their different platforms. And so the reason this is interesting is that as you look at these names, you might obviously recognize some of them because they're some of the big banks. But the last couple of weeks we've been talking, and maybe a couple of months, I'd mentioned, some of the Caribbean countries have already done central bank digital currency, like the Bahamas has the sand dollar. The one name on this list, which is number 2 on the list, which you may recognize, is BIT. And so BIT are the ones that do the sand dollar central bank digital currency. And the additional reason why it's interesting is Overstock is the parent company of BIT. So BIT has launched their venture capital. So we've talked a little bit about Overstock and tZERO and these different businesses. And so, kind of you're digging under the layers and looking at who's doing what. This is something that I think is worth paying attention to. Singapore is really thinking forward about what and how things are going to play out. They've linked up with India, and they're launching Q2 next year, where you're going to be able to interbank transfer for free from India and Singapore, which is obviously a massive market. And so, really interesting stuff. Their website is super unique and interesting to look at where things are going from a DeFi space. So that kind of caught my attention this week.
Yeah, it's super interesting.
And the last one, housing. I mean, really, I know I talk about it each week, and I listen to a bunch of great research and individuals. I listened to Kyle Bass this week, and Kyle was one of the hedge fund managers that shorted subprime and basically made his career off of that, become a billionaire as a result of it. And so, I listened to him this week, and he said, I don't think the U.S. housing market is overheated, and I don't think we have a crash of any sort. And so, I try to balance and rectify this, and obviously interest rates have a material impact on this. But the reason I want to put this up is, if you look at the percentage of increases in the last couple of years, and you look at why they're so worried about what's happening with interest rates, this is an interesting visual. Obviously, if you look at the 10-year return in Phoenix, for example, had you bought in Phoenix 10 years ago, your house would have gone up on average 180%. And so, you can almost draw a direct inverse correlation to interest rates over the last 10 years and say, people ask, why have houses gone up? Well, interest rates are falling. You can borrow more. You get this kind of this counterbalance that happens. So, it's kind of hard to believe that housing isn't, I'd say, ahead of itself, particularly in the U.S. I haven't been able to find the Canadian statistics broken down this way, but I certainly hope to. But it looks like housing has certainly been on a tear, and I'd be surprised if you get a continuation of this price appreciation. And so it's something to pay attention to in this bubbly market.
Yeah. Did you say Kyle Bass said it wasn't overinflated? What was the reason behind that?
You see, it was kind of a comment around household balance sheets and the amount of cash in the system. So there's the other argument right now is there's, something like $4 trillion in money market funds in the U.S. and consumers' balance sheets on average are healthier than they've ever been. So his argument is that people aren't as overextended as they were in 2008. So that was really the argument that
Gotcha.
that he had. Yep.
Interesting.
Yeah.
Awesome. Does that conclude the Ben's charts, or do you have one more? I lost track.
Concludes the charts today.
Okay. I lost track after 3. You lost me at 3. All right. Well, let's zip on through what you see for a short next week. Markets are closed on Monday, both Canada and US.
No, just Canada. Just Canada.
Isn't it Columbus Day?
Yeah, they don't take a break for Columbus.
No, no. There's probably a lot of reasons for that now. Yeah. But my guess it won't be called Columbus Day for much longer.
I'm thinking probably not.
way things are going.
No,
so U.S. markets open?
Yeah, U.S. markets are open, so I'll pay attention to that and see what's happening throughout the day on Monday. But Canada will be closed. U.S. takes a big holiday around their Thanksgiving, so that's a super quiet trading week.
Yeah.
But a shorter week for us next week. I think the thing that I look at mostly is that bond yields. I mean, we talk about the U.S. 10-year bond yield frequently. We touched kind of that 162, 163 today on the U.S. 10-year. Looks like it's the top of the range. I'd expect it to migrate back towards the kind of 140, 141-ish level. If you get that migration, you're going to get tech stocks, small caps ripping again. So I'd continue to watch that top end of the 10-year. If it continues to creep up, it may be telling us that there's something else going on. But if we look at the jobs numbers today, and this is backwards looking data, we got the Delta virus rolling over in August as well. And so if we're extrapolating out, which I'm supposed to do when managing your money is how am I positioning for what's ahead. When we extrapolate out, probably jobs start to come back as the virus is faded, consumption starts to come back, growth starts to come back. And so I'd expect that, so I'd be paying attention to what's going to happen on that US 10-year. And if we have it migrate back to the bottom end of that range, you get tech and small caps do well through that period, and the S&P 500 because it's heavily weighted to tech. So I'd be continuing to watch that. The other side of what I'd be doing from a Canada perspective is what's going to happen with energy. Obviously, we've had oil rip. I know we've had a bunch of clients ask us about prices of oil and gas and things like that. So we've had that rip quite a bit here. I'd expect we're probably in a toppy range, and so I'd pay attention to that because it probably has some influence on what's happening with Canada US dollar as well. So that would be the other thing that I'd be watching for next week.
Great. Anything of note that you want to add before the big long weekend?
Yeah, I don't think so. I guess the last thing that I put in the email I'd comment on is just the central bank. Coming into about 2-3 weeks ago, there was a 90% likelihood that Chair Powell would continue to run the central bank next year. And then we've had this blow up. We did the podcast this week where I went off a little bit on Rosengren and Kaplan and all these multimillionaires trading on inside information. Once that's come out now with the central bank, you've seen the odds of him being reelected drop from somewhere around 90% to about 60. And so you have that probability increasing that you're going to have a new Fed chair in January. So the risk is if you get a new central bank chair in there, who are they going to be? Are they going to bring the same kind of dynamic? Are they going to decide they want to put their stamp on things? If they decide that they're going to come in, we bring in a new one. Someone asked about Brainerd, like if she comes in, is she going to have a different view? I think the answer is likely anybody new is going to have a different view. So it's important to pay attention to. If it's Powell, at least we know what his plan is. He's going to start tapering. He's already told us. If we bring somebody in new, maybe they say they're going to aggressively taper, and that Q2 of next year outlook might actually get jammed up into Q1 if you get a new central bank chair in January. So not urgent to make any changes as a result of that, but important to pay attention to that kind of changing dynamic that's potentially happening in the US.
Okay,
That was
great.
it, man. That was
That's
it.
it. Just ripped through that one, eh? That's a lot of information in what is that? 20 minutes.
Yeah.
Okay. No, it doesn't seem like there's any questions. So if anybody, I'll give you guys a couple minutes if you have any questions. But
Everyone's ready for Thanksgiving. That's why they're outside, sun shining, as you can see, and they don't want to hear us talk today.
That's it. Eh? You want to you're getting ready for that bean casserole and the stuffed turkey.
That's it. Exactly.
All right. Okay. Well, hopefully everybody has a great long weekend, and we'll see you next week.
Sounds good. Have a good weekend.